we check this high point, starting from this high point, we begin to count the Fibonacci number, right? So we see 144. Fibonacci number 144 would be 23 days later. 23 days. That means roughly 2 months. 2 months later. So we say based on extended golden section, 161.8% would be the final, the last defense line. If in near future, the price can break this level, can take this level, which is around 14,974 points, means what? The market very likely would keep hitting new highs, would keep going up for a while. Maybe this turning point means after another rally in future, maybe 2 months later, then we reach Fibonacci number 144 after 23 trading days. 2 months, roughly 2 months, right? Sorry, it's 1 month, sorry, it's 1 month. So 23 trading days, roughly 1 month, right? Roughly 1 month means 1 month later, maybe the price reached here, and maybe that will be the beginning of another significant drop, because now it's still in bearish divergence. As long as the bearish divergence continue, then sooner or later, another significant drop like this one, like this one, like this one, and this one would come. So based on extended golden section, what we know is if really in future the price can take this level, 14,974, then very high probability price might continue going up for another 1 month. But let's say if in near future the price is reached 161.8%, unable to break up, then begin to drop. Maybe the price might drop, or sideways there. Then maybe in future would reach here. Then means by then it will not be a high point. Maybe relatively speaking, it would be at a low point. After that, price might turn upward. So we have two kind of possibilities here. So depends on this level, 161.8%, whether can be taken or not in future, whether the price can hit a new high or not, 161.8%. This is the important level to check, because based on extended golden section, as if this level taken, very likely the price would keep going up further. That is the regularity based on the extended golden section. Okay, and that is for the performance for US market. Means what? Maybe the significant drop may not come immediately. That is if the price in future really break up 161.8%. But if the price still cannot break up this 161.8, in near future, price might drop again. Maybe may not be that big drop. It might drop and then touch the previous high, which is the very important support, right? Then if the support also can hold, the price would sideways there, volatile there. Means US market might be at least in sideways if price unable to break up 161.8%. Okay, so that is the performance for Nasdaq. So for S&P 500, I believe it will follow Nasdaq, because the three major indexes of the US market usually would move in the same direction. Nasdaq up S&P 500 most likely also would be in same direction, up. If Nasdaq drop, also S&P 500 might drop. And then we say based on extended golden section, now S&P 500 is around 138.2%. Also, it's a significant resistance. Just need to see whether or not the price can break up. Of course, it's also in bearish divergence. Means the dangers are accumulating all the time. So sooner or later, another significant drop might come. Okay, so that's for S&P 500. For Dow Jones is finally the price is challenging the previous high. Here, the long upper tail shooting star. Okay, so now the price is challenging, but hasn't yet confirmed to be a successful breakthrough. So if the other two indexes finally can go up, I believe Dow Jones also can go up, break up a new high. But if the other two are unable to break up the current strong resistance level, then Dow Jones also might turn downward again. Below, we have the blue Taichi signal as the strong support. Of course, also it's in bearish divergence. So this is for the US market. So considering the three features we have mentioned just now, how to deal with the US market so that we can still capture the opportunities and avoid the dangers. I think two choices, two strategies very important. One strategy is always control your position. When you cannot see very clearly the direction, then you better put light position in the market, not heavy position. On the other hand, because we're not sure when the real significant drop would come, so always we have opportunities, chances. So we can try some short-term trading, short-term investment, light position, short-term investment, and also short-term investment, you should pick those strong stocks. If you can focus on the strong sectors, that would be better. So you remember last Tuesday, I mentioned for the US market, the strong sector. One of the strongest sector is healthcare, right? Healthcare. So I even remember last time I mentioned a sub-new share. IPO was just 1 week ago. You still remember, who still remember that share I mentioned last Tuesday, belonging to the healthcare sector, and it's a sub-new share. I mentioned the chart is very interesting, you remember? So who still can remember the one I mentioned? I said you can monitor the share yourself if you also find it interesting. If you yes, someone remember. Yes, that is the Caribou Bio. So if you check the performance for this share recently, after I mentioned it, that's crazy. More than 50% of rise since I mentioned it last Tuesday. So it belongs to the strongest sector, the healthcare. And I have picked this one because the pattern is very beautiful. It has a very beautiful pattern. Then I feel that this one maybe have chances. Of course, I didn't buy myself. Okay, currently my position, I don't have position in the market now. For US market, I didn't buy any stock now. So yeah, okay, so I didn't buy it myself, but I told you already, if you find it interesting, you can monitor itself. I don't know how many of you monitored, because today I happened to check the stocks I had in my watch list. Then wow, I saw this one up so much. I mentioned it last Tuesday, but I didn't because I have a lot of business to attend to. I didn't, I just saw it the following day. I saw it drop a little bit, and then I didn't check it again. And then today I check it, oh, it surprised me. It belongs to the strong sector. So means if you always stick to the strong sector, even when the market, the direction is not clear or it's weak or it's volatile, you still can capture some chances, some profit, and also you're quite safe because one thing is your position is not that heavy. Even if you lose, still that is small amount. The other thing is because you have picked the strong sector, the strong stock with the beautiful pattern, then of course you can capture the profit and also avoid the risks. Later we can check the chart together. Later we can check. So yes, that is about the, let's say, the performance of the US market. After checking, we have summarized the 3 features of the US market and also how to deal with the US market. Okay, so then how about our Singapore? Singapore market here, it also surprised us. Where is my, okay, so Singapore market, let me share again. Seems like the sharing paused. So Singapore market, we say usually our STI in August, it dropped quite sharply. That is the normal situation for the past years. Success rate can roughly touch 100%, but this year seems like the market is going to surprise us again. Singapore market also is going to surprise us again. Why? Because today is the first trading day after the national holiday. After the national holiday, but we see today it's a forceful rise, more than 1%, and the price now is challenging the final defiance line around 3,200. 3,200 is the previous yellow Taichi signal and template hole. So can you see this is today? Now the price is challenging this level. So if price can even break up this level, wow, maybe this August, this so-called, this so expected sharp drop in August might not come this year. It might be an abnormal August this year. So yes, we say the stock market is full of surprises. Okay, so that is one kind of possibility that might come true in the future. But now we see the price is challenging. Now the yet confirmed can break up. But we see such kind of possibility, right? If in the future the price really break up this level, then yes, this August at least will not be as bearish as previous August, like the previous years. So also like we say, usually in July, higher probability, the price up, quite bullish, but you see this year, this July, remain volatile. So I mentioned early July, after this long bullish candle, that this year, July might be volatile. Then yes, it is volatile. And maybe this August, our STI may not be that bearish as before. Okay, so also means that we always have to let's say be flexible. Don't let's say try to feel that the market must do something, must follow your expectations. It might not follow your expectations, your predictions. So you have to change according, based on the concrete situation. You should try to be flexible, okay? So means if you check the performance for DBS today, it's up by more than 2%. Of course, STI up by more than 1%. DBS will be up a lot. That is understandable, right? Yes. So means what? If recently you have tried to clear your position for the banks for DBS, then it might not be in your best favor, right? So this is yes. So if you want to, let's say, avoid selling too early, then maybe you follow the indicators. We say yellow lines of Homely rainbow. If price never drop below yellow lines of Homely rainbow, you can just keep holding. If it drop below, and if your position is very low, you just decrease position. No need to clear all of your position. So for those who have bought DBS around $18, $19, $20, very low, right? Then you don't actually have to decrease to clear your position at all, because not yet the big drop not yet confirmed to be let's say certainty, right? So you at least you need a confirmation to sell, to decrease your position. So not rather than clear your position, because it's difficult for banks like DBS to drop back to $18 or $19 again. Okay, so yes, that is for our STI this August. So we need to see if the price can clear this previous high here, can hit a new high. So if can, this August might be an exception. It might be bullish, or at least might be volatile rather than extremely bearish like previously. Okay, so that is for STI. For Hang Seng Index, ever since the blue Taichi signal at the bottom, now the price is still trying to break up the significant resistance here around the current price level, 26,600. So once the price can finally clear this level, bigger rising space above until the price maybe touch this longest blue bar of chip distribution above. So that is a big rising space here. So for Hang Seng Index, then for QCI still remain quite bearish around the final support line. This is the final defense line, the longest blue bar here. So once the price really drop below this level, then we say that it would be terrible for Malaysia market, because below we see the support levels are very weak, very weak. So now the price is still around, but I have got some feedbacks from members. Although the index QCI is very bearish, right? Individual stocks, some individual stocks still quite strong. I know one member who has got very handsome profit from Malaysia individual stocks recently. So that is, yes, however bearish the market can be, we always have some strong stocks which can give you quite handsome profit. So you need the proper method to pick up this kind of stock. Okay, so that is for the Malaysia market. So okay, so just now someone mentioned about this CRBU, right? So we can check, and also some individual Singapore shares. So recent popular stocks, strong stocks of Singapore, before we go to talk about the contents about access channel and Taichi signal. So let me go to the software. Where's the software? Okay, so now you can see the software, right? If you can see my Homilychart software now, can reply 3 in the chat room. Can you see the software now? No, cannot. I will share again. I am sharing the software now. How about now? Still cannot? Oh, yes. Okay. Okay, so good. Now you can see the software, right? So let's check the CRBU. Caribou Bioscience. So when was the day I mentioned this? I mentioned this stock this day. That is 2nd August, last Tuesday. Oh, okay. So that would be last Tuesday would be 3rd August, right? So this is 2nd August, and the following day is 3rd August. Okay, because this is Tuesday, and when I was talking about it, the market hasn't yet opened because the market opened 9:30. Our class finished 9 p.m. So actually, that is when I was talking about it. We only can see this candlestick. So this is the candle we were checking last Tuesday evening in the class, and I said this chart is interesting because yes, we have the blue Taichi signal. Remember, blue Taichi signal, and when we were checking, the price already confirmed above the high price of the blue Taichi, and big boy begin to appear a little bit. Then I find the chart is very interesting. I said it's a very interesting chart because it belongs to the strongest sector. Last week, healthcare is a strong sector, and until now, it's still the strong sector. You can see the performance for BNTX, for Moderna, very strong, right? Yes, and also some other stocks belonging to healthcare, very strong recently, still quite strong recently, including this one. It turned out to be quite strong. This is the day, and then Tuesday evening, it dropped. It actually open high but close low, right? Open high, close low is still above the half of this long bullish candle here. It's considered to be still quite strong. The pattern is still quite a strong pattern. Upward momentum still remains strong. So yes, the following day, actually, if you are the aggressive type, you can try to buy a bit. Not so much, maybe just a little bit. Then that is until last night, right? Okay, so after this, well, it's a very sharp rise in 4 days. If you feel that it's too high, and also the healthcare sector usually is quite volatile. It can be up quite sharply in the short term. It also can drop quite sharply in the short term. Well, you feel it's very high. Then what you can do is after the price, if close price drop below the half of this long bullish candle, you can already clear your position to secure your profit here. At least you have roughly 30% of profit. If you have managed to buy here for these 3 days, and the half level here should be roughly 30% and even more than 30%. And yes, it's not difficult to do. Does this mean after blue Taichi will follow with price increase? Not necessarily that after the blue Taichi, the price must go up. It has precondition. Precondition is the close price should be higher than the high of the blue Taichi signal. And also, if you check energy supply is sufficient, of course, the rally can be very fast, faster one, very forceful one. But if after the Taichi signal, even the price above the high of the high of the Taichi, no energy supply, no big boys, still will not go up so much. Maybe just a very small rise. Energy supply has the final say. Energy supply. Okay. Still can, I already told you for very short time, it's very sharp rise already. And healthcare stocks can be very volatile. It can be up a lot very soon, also can drop very soon. So if you feel that it's already very high, you take the half level to decide your take profit level. This is until now. Maybe if tonight the price still can go up, it never dropped tonight, then you have new level to check. You always check the latest long bullish candle, the half one. This one now is the latest one. If tonight another big rise, another long bullish candle, then you take tonight's candle as a standard, the half level to check. Okay. So this is the strategy how to deal with this kind of market situation for US. Strong sector, strong stock, strong pattern, short-term trading. Okay, yes. And this is for our US market. How about Singapore? Singapore, we check DBS first. Okay, so DBS, you check the pattern for DBS. Actually, after the first red circle, we see the price didn't go up immediately. It dropped and then around and sideways around the close price of the first red circle candle, and then this is the candle, bullish candle, when the price gets support at a red circle, and then recent 3 days up. I think the pattern here also is it's now difficult to capture. Someone might say, wow, this is not the first red circle. We always mention that. Sorry, Gil, I want to drink some water. My throat not very good. Okay. Someone always say, wow, it's not the first red circle already. And you mentioned for many times, if it's already many circles away, don't try to buy. But why I said that still it is a very good moment to consider buying, considering buying. That is because we say, although it's many red circles away, the price is still very close to the first red circle candle. It's not very high. We say don't chase after the price when it's many circles away. That's because yes, the price already very high already from the first red circle. Of course, we don't chase, but for this one, it's very close to the first red circle candle, the price level. So it's not high. And that is when the price gets support at a red circle, then begin to go up. I think if we consider to buy some, should be okay. Divergence. Okay, so someone mentioned about divergence. That is what we have learned in previous sessions. Very good, you still remember and is trying to put it into practice, trying to apply it. It is in a potential bearish divergence, but it's not yet completed. That's one thing. Why we say it's not yet completed? Because we need another high point here to confirm this is a bearish divergence. It's a completed bearish divergence. Considering now it's still up, and we see deviation expert is red, we need it turn to green to have a high. It's red, then maybe in future if the red keep flowing in, money keep flowing in, the red go up, and then back to the previous high, and then maybe take the previous high. Then it's no longer a bearish divergence. So means in the future, if DBS keep going up, then money would keep flowing in, and then maybe would go back to the previous high and even take the previous high. Then it's no longer a bearish divergence. Now it's a potential one. If we check multicolor dragon here, oh, it's the purple line inside the red bar and turning upward. The pattern here actually is for very short term, at least for very short term, it's quite strong pattern. It's quite strong pattern. Today it's up by more than 2%. Of course, after today it's high. Definitely it's high after today. So we don't chase after so many recircles. It's already high. But 4 days ago, this is not considered as high. This is not high. The following day, if you check the mini chart combined with the PCK, right? So this August, the 23rd year anniversary, I know many members have bought the PCK, right? So if you have bought it, you must use it because it's very powerful tool. And I recommend that you must attend the Thursday morning session, which will teach you how to use the PCK, put it into application, especially for short-term trading, for pinpoint your entry points. I believe if you check, after you check the daily chart here, in the mini chart, it's very easy to find entry points in the mini chart for DBS around 3 days ago. Okay, so this is for DBS, and then recently there is one other share called BDF. Actually, this share it was in my watch list last week. I put it in my watch list after this candle. I picked it, this candle. I didn't expect the rally can be so strong. Okay, but yes, so this is for Singapore market. We feel that seems like no many good stocks like US, not so many. Still, actually, we have some stocks. If you are really looking carefully, you can capture some stocks, and if you have the patience to monitor, this one is not difficult to capture. I pick it because the first recircle price break up the high of the first recircle, and it has big boys take control, no retailer. The price sat right there for a while. And the previous yellow Taichi signal, now the price about to break up the previous yellow Taichi. So this pattern here is very beautiful pattern. Yes. At least this candle you buy, it's not a very difficult entry point to capture. Okay. You check PC kits, you can buy earlier. Okay. So this is for Singapore. We still have chances. You know, this day is up by roughly 30%. It's crazy, 30%. Okay. And also previously we have mentioned Grand Venture, JLB, right? JLB Grand Venture. This one we have been watching this for a while, right? So this is a very strong stock for a while. It is strong already for a while. So the recent rally, you see, it's very easy to capture. And later we learn the access channel, right? After learning access channel, you will have another method to capture the recent rally for JLB. And also based on red and white circle, you also can capture. Especially when the first red circle, that is when the purple line inside the red bar and turn upward. Very beautiful and very easy to capture. Not difficult at all, right? And okay, so for Singapore market, we see the strong property stocks like APAC, Realty, and OYY. Recent 2 days seems like about to go up again, right? So CLN, APAC. Okay, yes, and OYY. Strong stocks will always remain strong most of the times. Okay, so and also several other stocks worth your attention for Singapore market. These are the most beautiful several ones. Okay, so that's roughly about the market performance and individual stocks worth your attention. And then let's go back to the slide. We continue the contents about access channel and the Taichi signal. I'm back to the slide now. Can you see the slide? If you can see the slide, can reply 5. Can you see the slide now? Okay, okay, can, good. Okay, so about access channel and Taichi signal, right? So Taichi signal, I think a lot of you already very familiar, but access channel maybe is still quite strange to you. So let me share about the access channel first. This is the access channel. You can see the components. We have 4 lines. It's a red line, a yellow line, a white line, and a blue line. The red line is called the outer upper channel line, and it's one of the group of the together with the blue line, outer lower channel line. The outer lower channel line and the outer upper channel line, they are one group. They are one group. Okay, so they represent the long-term trend. So the outer lower channel line is the long-term support. The outer upper channel line is long-term resistance line. So together they form a channel. The channel, the direction, tell you the direction for long-term trend. Okay, that is the outer channel. Outer upper channel line, outer lower channel line. Apart from the outer channel, we have an inner channel. Inner channel consists of another 2 lines, the yellow and the white. The yellow line is called the inner upper channel line, acting as the medium-term to short-term resistance. And the white line here is called the inner lower channel line. So represent medium-term to short-term support. So this is another group. This is the inner channel, the inner group, outer channel, the second group. Okay, so the inner channel represent the short-term to medium-term trend. Outer channel represent the long-term trend. The upper channel line, either it's inner or outer upper channel line, they are the resistance. The lower channel line, whether it's inner lower or outer lower channel line, they are the support. Okay, so these are the basic components of the access channel. Okay, so how does it work? How does this indicator work? So basics about this access channel. So actually, the function is to capture the abnormal state. What do I mean by abnormal state? So the normal state is usually the price would move between the inner lower channel line and inner upper channel line. If you see the slow rise type or slow drop type, usually they move within the inner channel, move inside the inner channel. But the abnormal state is the price, the candles would exceed the inner lower channel line, or even the inner upper channel line, the price would even exceed the inner upper channel line. So this is regarded as a forceful correction or rally. So if we see the price exceed the inner low channel line, that is a forceful correction. So if the price exceeds the inner upper channel line, that is a very forceful rally. Later I will show you a real chart, you will understand. And then this is one kind of abnormal situation, abnormal state called forceful correction or rally. The other one is called extremely forceful correction or rally. That is when the inner lower channel line can cross down the outer lower channel line, cross down the outer channel, lower channel line. That is regarded as an extremely forceful correction. If you have the inner upper channel line crosses up the outer upper channel line, that is regarded as an extremely forceful rally. So these are two types of abnormal states which you can capture based on the XS channel. Okay, so that we can check one chart, you will understand. Check one chart. So can you see this is one example. We say this is the red line. This is the outer upper channel line. And then the blue line here is the outer lower channel line, right? And then the yellow line here is the inner upper channel line. The white line is the inner lower channel line, right? And then can you see that, for example, here, the price, this pink circle here, that is when the price drop below the white line, which is the inner lower channel line. Then means this is already regarded as a forceful drop. Okay, this is a forceful drop. If the price drop below the inner lower channel line, this is a forceful drop. And if you see even the white line can cross down the blue line, means the inner lower channel line downward crosses the outer lower channel line. Wow, that is regarded as an extremely forceful drop. Can you see the drop here is extremely sharp? So this is the abnormal situation, type 2. This is type 1, type 2. And this is also a sharp drop, a forceful drop, because the price drop below the white line here. Okay, and then can you see here? This is when the price break up the yellow line. Yellow line is the inner upper channel line. When the price can exceed the inner upper channel line, means this is a forceful rise, Okay, and also here the price exceed the inner upper channel line, forceful rise. And here is another interesting phenomenon when you see the yellow line cross up the red line. It's regarded as extremely forceful rise, extremely forceful rise. And here also you see the yellow line cross up the red line here. It's extremely forceful rise. You see 1 day, 2 day, the rise is a very sharp one. So these are the extremely forceful rise. Here again, this is a forceful drop when the price drop below the inner lower channel line, the white line. Okay, so this is how we can tell the forceful correction or rally and extremely forceful correction or rally. Is it clear here? Am I well understood? If yes, can reply 6. If you can understand this one very well, okay, very good. So, so after checking the components and the feature of access channel, then you should know that this indicator, it cannot be applied for any kind of situation, just for special abnormal situations like sharp drop, extremely sharp drop, sharp rise, extremely sharp rise. So for some stocks, this access channel is not that useful. For example, if I go to the software again, I share with you several shares. Then if you want to check access channel for them, maybe that's not the best choice. For example, I give you one stock called Franken. You see, Franken, we see it's also a very strong stock. It's a very good stock, right? So it's, generally speaking, it's up all the time, and we have the big boys can take control, even take full control sometimes. So it's a very strong stock. But if you check access channel, what do you see? Most of the times, okay, most of the times, the price moves in the inner channel. It seldom exceed the yellow line, and we can never see the yellow line exceed the red line. The yellow line cannot cross up the red line, means the short the rises for Franken cannot be so crazy, not be that sharp like some other stocks. So only occasionally, you see, only occasionally the red line, the yellow line would cross up the red line. And when that happens, can you see here? When that happens, usually that's already the top, very close to the top. And then you see after that, the price begins to drop sharply. For most of the times, you see the yellow line cannot cross the red line. Means for Franken, it's, although it's up, generally speaking up all the time, the rises all very mild, not moderate rise, not so sharp rises. Okay, so means for Franken, if you want to, let's say, apply the access channel to capture some abnormal situation, not easy to do. We say here we have a Taichi signal, because later we will learn a strategy called a desperate feedback. Desperate feedback is based on blue Taichi signal, access channel, and also multicolor dragon. If you check here, we do have a blue Taichi signal. But if you check the condition for access channel, yes, the price, it dropped below the inner lower channel line for 1 day, then the following day back. It's not so sharp a drop, just 1 day below. And also if you check multicolor dragon, for retailers, you see it's within 25%. It's not really a desperate feedback. Although we see the price is still up after that, it's not a desperate feedback. It's not a very desperate drop. It's not that a sharp drop. This maybe is some pattern, some profit you can capture, but not the pattern based on the desperate feedback. And also it reminds us, no method, no strategy can help us capture every chance. One strategy is especially good at capturing some certain patterns, some certain chances, but cannot capture all of the chances. For this kind of rise, you need some other method. You need other methods to capture, maybe based on, let's say, red and white circle for short-term trading and the purple line inside the red bar upward. you also can capture this rise. See, first circle, purple line inside the red bar turn upward. The short-term rise, you can capture some other method. So then if let's say Raffles Medical also roughly speaking is quite a strong one, and also you will see most of the times the price moves within the inner channel line, inner channel. The yellow line and the white line, it seldom exceed the inner channel lines, either the inner upper channel line or inner lower channel line. The yellow line can seldom cross up the red line, and the white line can seldom cross down the blue line. So no extremely sharp drop for this one. See, can see? Most of the times the price just move within the inner channel, cannot touch the outer channel lines at all. Okay, when the price, when the, let's say the line do, the yellow line do cross up the red, that's already maybe very high, close to the top already, when you see it really cross up. Because most of the times it's just within the channel. Then if it's already outside of the channel, in the channel, then usually it's already close to the top. Like now, it's already high. We have the yellow Taichi, and in near future, maybe the price might drop. If the price really drop below the low of the yellow Taichi signal. Today, the price still around the low of the yellow Taichi. Now, yeah, really below, right? Once the price drop below, then maybe there would be another correction for at least a short term for Raffles Medical. So if you have secured some profit, short-term profit here recently, maybe you want to consider leave for short-term trading. Once you see the close price drop below the low of the blue Taichi, about to drop below, but not yet. Today is still around the low, not really drop below already. Okay, so that is for Raffles Medical. Also means access channel may not be a very good indicator for this kind of stock. So in conclusion, if your stock is the slow rise or slow drop type, so the rises and the drops usually not that sharp, not that fast. Usually then you check some other methods rather than X channel. XS channel is for the abnormal situation, like sharp, extremely sharp rises and drops. Okay, and okay, so for, let's say for Apple, it's also the same. Apple is a good stock, but you see most of the times the price just move inside within the inner channel. When the price really touch the outer channel line and the yellow line cross up the red line, it's already the top. Can you see it's already the top? Okay, it's already the top. Okay, so also means yes, for Apple, access channel is not a very good choice. It's not a very good indicator for this one. Okay, so now you understand what kind of stocks would be good to apply the access channel. That is very important. Not like every stock you can apply the access channel. I want you to make clear of that first. Okay. Then let's go back to the slide. I want to continue the sharing. Okay, so after checking the access channel, the basics. Okay, so give you the summary. I haven't yet given you the summary. Keynote about access channel. So it's a trend indicator for checking medium term, the short term, and also the long term performance, long term trend. Okay, the feature is, or the function is to capture abnormal situations. Just now we have checked what kind of rises and drops can be the forceful one and extremely forceful one, right? Okay, then after we learn Taichi signal quickly, we learn how to combine these two indicators. Okay, so about Taichi signal, the theory basis is the Taoism. Taoism is the classical Chinese philosophy. It's called, yes, Taoism is about when extremity is reached, the price must turn around, head to the opposite direction, because it's already the extremity. No choice but to turn around and change direction, head to the opposite direction. We have blue Taichi and yellow Taichi. The blue Taichi signal, the blue candle, usually means the downward movement has reached extremity. Usually it's oversold. Like usually the blue Taichi means very low position, bottom catch chances. And the yellow candle means the upward momentum has reached extremity, means it's overbought. Overbought usually means it's already very high position, very likely the price might drop. Okay, so that is the basics about Taichi signal. Some next of the application of Taichi. So firstly, you can apply it in both daily chart and weekly chart, and also you can apply it in a monthly chart. So the bigger the cycle you choose, the more powerful the indicator. Means if you got a yellow Taichi signal in the monthly chart, it's a very let's say very dangerous signal that the price is very high position. If the price really drop below the low of the yellow Taichi in a monthly chart, the drop might be for a long time drop. It might be very big drop, last for a long time and big changes. That is, you check it in the monthly chart. Then, of course, the weekly chart, the Taichi signal would be even stronger than in the daily chart. And of course, in the daily chart, it also can be quite strong for many cases. But roughly speaking, we say weekly chart stronger than daily chart. Monthly chart, the signal is stronger than weekly chart. Okay, and then how to buy and sell based on the Taichi signal. Usually we sell when the close price is lower than the low of the yellow Taichi, because yellow Taichi is top escape signal. We get ready to sell when the close price lower than the low of the yellow Taichi signal. And then if you have the close price higher than the high of the blue Taichi is the bottom catch. The condition must be close price higher than the high of the blue Taichi signal. You consider to buy, to do the bottom catch. Okay, so the Taichi signal also would be strong support or resistance in future. This also you need to take special notice. Not only it is effective by at the moment the signal appear and the price drop below or break up the Taichi. But also it can be useful in future, act as strong support or resistance in future. Okay, so we can check one example. So this is the weekly chart. Now we're checking the weekly chart and historical performance for Tencent. Can you see that the significant high yellow Taichi price drop below and rebounded and act as a resistance. This is the yellow Taichi acting as resistance for future and unable to break up, drop below the low of the yellow Taichi again. This is the double confirmation, beginning of significant crash because we're checking the weekly chart. Weekly chart can be stronger than the daily chart. Okay, it's a more forceful danger alert signal. Okay, and then at the period bottom, this is for many months drop. This is one candle represent 1 week, weekly chart. So at the bottom, we got the blue Taichi. Once the price break up the high of the blue Taichi, so beginning of the very long time rise. So this is the low, the very low here. And then you see it's very powerful, right? High and low. And then here we have the yellow Taichi, but the price didn't really drop below the low. We see it's below for 1 week, then go back above. Below for 1 week, then go back above again. So didn't really drop below and a break up. Finally choose direction up. And then we have the price drop again. Now it's acting as support. See this candle is very interesting, long lower shadow. That's because yes, the previous yellow Taichi signal here is acting as support. And interestingly, can you see recently, the recent chart for Tencent? Last week, we see the price begin to rebound, stop dropping further, and the level is the previous yellow Taichi. See, interesting? The yellow Taichi here, previously, this is resistance. Once the price break up the level here, now it's acting as support. Interesting? The previous 2 weeks, the lower shadow even exceeded the bottom of the previous yellow Taichi. Finally, but close price above. And last week, we see the price open around the level but close higher. It's a stock showing that the price is stopping dropping further. Maybe the price might begin to rebound at the support level here. Bottom catch chances. Maybe go to the daily chart. Go to the daily chart to see if you have some chances in the daily chart. At least in the weekly chart, this is strong support. So you see, Taichi signal is very powerful. Not only because it's a danger alert or it's a bottom catch alert signal, but also because in future, the level also would be a strong support or resistance. Okay, so as the danger alert signal is quite powerful, especially in the weekly chart. So this is the historical high. The price drop below the low of the yellow Taichi signal immediately. That is the beginning of the very sharp drop. So you take the signal in the weekly chart, can easily avoid the very sharp drop for several months already. This is, I think this is already roughly 1 year. If you, not 1 year, at least 6 months, I believe. At least it should be 6 months. One candle is 1 week. Four candle is 1 month. 4 candle 1 month. Then 24 candle means 6 months. You can see roughly this should be more than 24 candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. These are 10 candles. Then 20. Roughly this is 6 months, right? Wow, that's a very sharp and long-lasting drop. If you check the yellow Taichi in the weekly chart, wow, that's very beautiful, and it's easy to avoid, right? So that is the power of the Taichi signal. Okay, you can check your own stocks to see the function. Check the daily chart, then also go to the weekly chart and even monthly chart to see. You will understand, okay, the power in the daily chart, weekly chart, and monthly chart. And then finally, we check the application of the combination of access channel and Taichi signal. We say access channel is to capture the abnormal situation, right? And so does Taichi signal. Taichi signal is, we say, extremity reached. The price of the change direction. Extremity also is abnormal situation. Abnormal, yes, situation. So abnormal plus abnormal. We capture abnormal rises or abnormal, let's say, usually we capture abnormal rises, right? Abnormal rises means, well, after sharp drop, then capture some rebound. So bottom catch. And this bottom catch method is called desperate fallback. Why it's called desperate fallback? Desperate means, well, previously the drop is so sharp, so big that every investor become desperate. Everybody extremely desperate. Okay, so that's why it called desperate fallback. So the strategy is to catch some medium-term to long-term big bottom, especially if you apply it in the weekly chart. It can really help you capture the historical low. So check the last keynote. The pattern is even more powerful in weekly chart than in daily chart. Later we can check the effect together. Okay, so conditions to be satisfied for desperate fallback. First condition, we need a blue Taichi. Blue Taichi signal, bottom catch, oversold, extremity, right? And then strong or extremely strong correction based on XS channel. We have learned strong or forceful correction means the price should drop below the inner lower channel line, and extremely strong correction means the inner lower channel line should cross down the outer lower channel line. So this would be considered as strong and extremely strong corrections based on access channel, right? And then we can check multi-color dragon usually show retailers more than 90% because most of the investors, retailers already stuck there and deeply stuck. So that's why people become desperate, feel no hope at all. Okay. And then we buy when the price successfully stand above the high price of the blue Taichi signal. Okay, so buy based on breakthrough of the high of the blue Taichi signal. Okay, so show you one example. Later we check the software to practice and to answer your questions later. And can you see here the pink rectangle here? The pink rectangle here. We have two blue Taichi signal here. We have two blue Taichi. The blue Taichi appear after the extremely forceful correction when the inner lower channel line downward crosses the outer lower channel line. Means the white line cross down the blue line. This is extremely forceful drop. Very sharp, you see, very sharp. That's why the Taichi signal would appear. The blue Taichi would appear. And also that's when retailers more than 90%. All the retailers become desperate because no hope, because yes, deeply stuck. Okay, so once the price break up the high of the first blue Taichi, because the two Taichi close to each other and the first Taichi, the high is higher than the second Taichi. So we take the higher level. So the high of the first blue Taichi breakthrough happens here. So after that, yes, the beginning of the long-term rally. So this is to capture the medium-term to long-term bottom. It's not the very short-term bottom after some short-term drop, then you capture some short-term bottom. No, this is for medium-term to long-term bottom to catch, because that's when everybody become desperate after sharp drop. Okay, this is called desperate fallback. Okay, and then you can check here. We also have a blue Taichi signal, but this time, can you see that one thing is the price just dropped below the inner lower channel line for 1 day and quickly go back. So it's not that a forceful drop for one thing. For the other thing is you check multicolor dragon, retailer cannot even exceed 50%. It's not that desperate. So this is not a desperate fallback. Of course, we also have some rebound after that, but it's not a strategy here. The desperate fallback usually is after very sharp drop and to capture the very big medium-term to long-term big bottom, not some small drops. This may be for short-term regarded as quite a sharp drop already, but if you check medium-term, long-term, this is not so big a drop. Previously, that is a big drop because retailer reached more than 90%. But this time, retailer still within 50. It's just a short-term to medium-term correction, not a very big, very forceful drop. So this is one example to show you. And here is JD.com. Retailers, this is weekly chart. Can you see? Weekly chart can be even more forceful, right? Weekly charts, retailer more than 90%. Clearly, retailer more than 90%. Deeply stuck, retailers deeply stuck. And then we have the extremely forceful correction when the inner lower channel line downward crosses the outer lower channel line here. So this is considered as very sharp, very forceful, extremely forceful drop here. And then we have the blue Taichi signal, two blue Taichi, and finally price break up the blue Taichi, and then it even consolidated there for a while. This is 1 week, one candle, 1 week. This is roughly another 3 months, roughly. Another 2 or 3 months, sideways, then begin to go up fast. When you see the retailer decrease sharply and then finally disappear, then sharp rise. This is the extremely big bottom, medium-term to long-term big bottom to capture. So this is desperate fallback in the weekly chart, even more forceful, right? Okay, so this is the first strategy. Then we learn the second strategy first. Then we go to the software to check some other examples to do the practice for the first strategy, desperate fallback, and the second strategy is called crazy bull on the go. Remember, crazy bull on the go, this is a short-term trading strategy. Means this strategy will apply it in the daily chart, and it's for short-term. Desperate fallback, you can either apply it in the daily chart or weekly chart. Weekly chart even more forceful, but for crazy bull on the go, it's just a purely short-term in the daily chart. All right. So it's a short-term trading strategy. And the precondition is you better pick the stock with big boys take control or take full control. This is the precondition. Only when the big boys take control or take full control can you have the very sharp, very crazy rally. Then you can have the real crazy bull. Then you will have the the abnormal rise and extremely abnormal rise based on access channel. If big boys cannot take control, then you can seldom, you can rarely see the abnormal and extremely abnormal rises based on access channel. It usually will be a gentle, slow, mild rise. So we mentioned for that kind of rise, access channel is not the best choice. You better check some other indicators than access channel. Access channel is designed for abnormal situation. Okay. Then the third condition is the inner upper channel line firstly cross up, then cross down the outer upper channel line. That is the third condition. If you feel it's not easy to understand the description here, later I show you the chart, you will understand very easily. Okay, and then we buy when the close price break up the inner upper channel line. Okay, so you want to take some pictures, you can take pictures here because I'm moving forward to the next slide now. Explain again, sell when close price is below yellow Taichi. Why cannot see if closing price is in middle of Taichi? What do you mean? Either you buy on the based on the blue Taichi or you sell based on the yellow Taichi. You check the close price. Close price has the final say. All right. Okay. Okay. So okay. So I show you this is Tesla. One thing is the precondition satisfied. We have big boys take control all the time. Read the bar above 50 stably all the time. So this is the proper stock to pick for the application of crazy bull on the go because it's crazy enough. Big boys take control and even can take full control for a while. So this is the real crazy stock. Crazy bull. Okay, so crazy bull on the go, precondition satisfied. Second condition, we should have the inner upper channel line cross up the outer upper channel line, then cross down the outer upper channel line. So actually, it means the yellow line cross up the red line and then cross down the red line again. Cross up first and then cross down. For example, you see here. The yellow line cross up the red, right? And then cross down, right? Cross down here. So cross up, then cross down. After it cross down, then if you have the price break up the yellow line, you can buy. That's why you see the buy point is here. So you can buy. Then for how about sell? For sell, if you see the price drop below the yellow line, actually you can sell. So means for this kind of situation, you buy around this candle, then you sell around this candle. Short term, you can sell any moment as long as you have some profit, either small or big, or you don't lose money, you can leave first. And then, so here also the yellow line cross up the red line a bit and then cross down here. Then firstly cross up, then cross down. Then you see the price break up the yellow line here. For short term, can buy. This is a forceful rise for short term. You see the price drop below the yellow line here. Already can sell for short term to secure the profit here for short term. So cross the yellow line, cross up the red and then cross down, right? Cross down the red and then price break up the yellow line here, then buy for short term. Then price drop below the yellow line, sell for short term. Okay, so buy and sell, crazy bull on the go. Capture some very short term, fast rally, crazy rally. And then the yellow line cross down the red line again. So this is the moment when the price break up the yellow line. Ever since the yellow line cross down the red line. This is the first time really the price break up the yellow line here. So this time it break up for 1 day but failed. The following day back below the yellow line. Doesn't count as a successful breakthrough. This is a real successful breakthrough. So beginning of another rally. So if you are considering to sell for very short term, you sell here, no problem. When the price drop below the yellow line, can sell. Okay. And then cross, we have the yellow line cross down the ray, and then here cross down the ray, and then you see the price above the yellow line again. For short term, you also can consider to buy here, right? Consider to buy. So this is for a crazy bull on the go. So is it clear? This regarding the second strategy here, is it clear? If I'm well understood, you can reply 7. Okay, good. I see 1 reply. How about the others? Check. About regarding individual stocks, later we can check. Okay, so okay, seems like well understood. So then let's go to the, okay, let's go to the software. We can check some examples. Below the, no, not the yellow Taichi, the yellow line, the inner lower, the inner upper channel line. The inner upper channel line, not the yellow Taichi. I'm not talking about yellow Taichi. This second method has nothing to do with yellow Taichi. The second method is for super short term based on the, you buy and sell based on the inner upper channel line. Okay. I'm not talking, yellow Taichi is not for the sell point. It's not the sell point for this super short term, for this short term strategy. Crazy bull on the go is the short term. Yellow Taichi signal is the normal, let's say top alert signal. It's not the short term sell point. All right. Okay. So okay, so we can check some individual stocks. For example, just now I mentioned about this Singapore superstar BDF Excel point, right? Excel points. This share, if you see the chart, the pattern, we have a the big boys can be around 50, quite stably for a while, right? So this is regarded as big boys take control, no problem, right? No retailer, big boys take control. And then, for example, we have the yellow line cross up the red line. Cross up, we don't buy immediately. We wait until the yellow line cross down here, and then when did the price really stand above the yellow line with success? So here we can say, so this is the day the price trying to break up the yellow line, right? So this is after the yellow line cross up the ray and then cross down. Then we have the price trying to break up the yellow line. But the following day, yes, the close price is wrong. If you say this is a buy, roughly, you say this is a buy, you can try, no problem. But if you see the price immediately drop below the yellow, then you know it failed. You should stop loss. For short-term trading, you need to stop loss. Maybe frequently, because no one can make sure every trading is the right one. We will be wrong for sometimes and maybe for many times. After we realize we're wrong, we should leave first. new first, and then when is the next time the price really break up the yellow line, the outer upper channel line? Here, yes, here. Can you see this candle? It's clearly, this is the first day. The price, close price, break up the yellow line. The following day around the yellow line, then the third day, obviously it's above. So if you buy this day, good, no problem, right? So this is the crazy bull undergo, because we already have the price firstly break up the, we have the yellow line firstly break up the ray and then break down the ray, and then finally the price successfully stand above the yellow line. Then yes, buy. Okay, then wow. So this day the price is around yellow. The third day still around the level. You can wait and see. Or if you want to stop loss, okay, no problem. Stop loss, no problem. Then this day at least you should go back and enter again, right? You should be able to enter again, because this is when the price above the yellow line again, right? Close price, I mean. At least this 1 day 30% is easy to capture, right? That is until now. So this is Excel points. JLB, we have many methods to capture the recent rally for JLB, and crazy bull on the go also is one of the methods. So can you see that firstly, we have the yellow line cross up the ray, and then wait for it to cross down, right? Wait for the yellow line cross down the ray. Then wait for the price really break up the yellow line. So here the price break up for 1 day, 2 days, the third day filled below the yellow again. Maybe you want to stop loss for once for short-term trading. This day trying to break up, but really it didn't really break up. It really didn't break up, just around the yellow. So this is the day clearly the price break up. The following day drop a little bit, still above the yellow line. The third day, I say you buy, and then the recent rally, easy to capture, right? Very easy to capture. Precondition, this is a strong stock with big boys take control and even take full control for sometimes. Take full control. This is the strong stock. Applicable for the desperate, for the crazy bull on the go, for the short-term trading strategy. If you check the US market, you have the healthcare stocks a lot, satisfy the condition CRTX. This is also the healthcare stock, healthcare. So can you see last night, the rise is a very crazy one. Just 1 day, I believe it's more than 30%. You can check. It's 47, roughly 50% rise. So this is the healthcare. It can rise very sharply in a very short time. But remember, it can rise so fast, also can drop so fast. You need to be very careful with the healthcare sector. Can be quite volatile. Okay, fast up, fast down. But if you capture this one, firstly, big boys take full control, more than 70 for a while. So satisfy the precondition to apply the crazy bull on the go. So firstly, yellow line cross up the ray and then cross down the ray, and then the price didn't really break up the yellow line here. For the here, it break up for 1 day, 2 days, the third day you should stop loss. Should stop loss first. Try maybe first, then stop loss, and then try again here. So perfectly capture the 1 day rally 50%. Also very easy to capture. So if you feel it's too big a rise, maybe you want to consider to sell maybe tonight or maybe you decrease position tonight, or maybe yes, last night if you were still awake when the market about to close, then maybe you already left after the 50% rise, because one day 50 already too crazy for short term, good enough, can leave any moment. Okay, so this is the CRTX. Okay, so CRTX. If you check the already the superstar, the BNTX, also very easy to apply the crazy bull on the go. So the yellow line cross up the ray and then cross down the ray. After cross down the ray, so this is the day when the price really break up the yellow line. You buy, and until now no sell point because the price never drop below the yellow line. When you see the price drop below the yellow line for short term, can sell already for short term, but until now you don't have a chance to sell. Type very strong, too strong with big boys take full control. Okay, and then Moderna is the same, mRNA. Very strong. Yellow line cross up ray, cross down ray here, cross down ray, and then the price cross up the yellow for 1 day, 2 day, the 3rd day you should leave first. But for this time a field doesn't matter. But next time price up above the yellow line again, you should be able to enter. Then, wow, for short term, you want to leave here, no problem. Then you see the price above the yellow line again, maybe you can consider to buy again for super short term. The recent several days, the profit also you can capture. This is for super short term. You buy, and as long as you get some profit, get ready to leave any moment for super short term. Okay, someone mentioned about BTBT. You want to diagnose individual stocks. BTBT, someone mentioned about BTBT. Okay, BTBT. Wow, yeah, this is the desperate fallback. Very good. This is the Bitcoin, right? The Bitcoin stock. The Bitcoin, I don't dare to touch because it's too volatile. I know the Bitcoin stocks can be very volatile, but you check, this is a very typical case for desperate fallback. When you have the retailers reach almost 100% crazy, and yes, extremely sharp drop, because the yellow line crossed down the blue line. This is the extremely forceful drop, very sharp one. And then blue Taichi signal price break up the blue Taichi, the high of the blue Taichi. Close price, wow. 1 day rise too sharp. So not easy to capture for this one, because 1 day up too much. If you cannot react in time, it's already here. Already very high, you know. But if you can react very fast, maybe market open, then you can buy here or here, not so high when the market close. All right, okay. And then you see it's quite volatile. 1 day up so much, the following day also down so much. Right? It's quite volatile. But if you check the yellow line, as long as the price remain above the yellow line, you can, let's say, still hold, right? Still hold. Still above yellow line, above yellow line, above yellow line, above yellow line, hold. So if you see the price drop below the yellow line, maybe better you leave first for short-term trading. So this rally recently already is a very big one. But that is the, let's say, for very short-term trading, we mentioned about the desperate fallback is to capture medium-term to long-term bottom. If you are feeling that you want to hold for even longer time, maybe you check some other indicators to decide your sell points. Of course, we have the Taichi, yellow Taichi here. If the price drop below the low of the yellow Taichi, I would consider to at least decrease position. And the yellow Taichi signal already very close to the previous high. The previous high also is another yellow Taichi. Even the price in near future can continue going up. When the price reaches this level, strong resistance also might very likely turn downward again. So it's already very close to the, yes, to the final, let's say at least for in near future, the final targets. So it's already high. I will not chase. One thing is I will not, if I haven't yet bought, I haven't yet bought this, I will not buy. If I have bought, if in near future the price it really reached this level, turn downward, I would consider to decrease position. Or if it cannot even go up now until beginning from today, cannot even begin to go up, it begin to drop and then drop below the low of the yellow Taichi signal, I would at least consider to decrease position. Even if I'm planning medium-term to long-term investment for this one, I also would consider to decrease position at least. But for Bitcoin, it's quite speculative. For me, even if I really buy this, I only consider short-term speculation. I will not hold for a very long time for the Bitcoin stocks. Okay. Okay, so for example, recently our Singapore market, some called Marine. You also have the desperate buyback, the pattern here. We have retailers more than 90%, no problem. The price drop below the okay, it's not the price drop below the channel, but also it's the lower the inner lower channel break down the drop below the outer lower channel line. So this is an extremely sharp drop, very sharp, and then Taichi signal. Price break up. So for bottom catch, maybe you can consider to buy some after this candle. Okay, so now the price back to touch the level again. This is supposed to be support. The top of the blue Taichi now here is supposed to be the top, the support level. If the level can hold, turn upward again, the price begin to turn upward again in near future, maybe you can consider to increase position, or you haven't bought yet here, maybe you can consider to buy if the price turn upward again for bottom catch. But if the price drop further, even drop below the low of the blue Taichi signal, that means no chance. It might drop further. You better deal first. Okay. So if the price drop below the top of the blue Taichi signal, I would consider to stop loss first already. I will not wait until the price drop below the low of the blue Taichi because it's already very low. I might have to suffer bigger losses. I don't want that. So yes, if this level cannot hold, the top of the Taichi cannot hold, I would consider to leave if I have bought previously. Okay. But the pattern is the red pattern. Also for, let's say you check MyTech, Singapore. I don't know why US market, the healthcare stocks so strong, but Singapore ones also weak. Singapore healthcare stocks just won't go up, quite weak. So for this one, also we say Taichi signal, when retailers more than 90%, the price try to break up for once the high of the Taichi and then drop, get a support at the Taichi, trying to go up again. We can say this is something like a double confirmation. In near future, maybe the price might continue going up. So yesterday, the long bullish candle, the half level, as long as it can hold the half level, should be okay. If the level cannot hold, maybe I would consider that it will not be very strong, at least for near future. But this level, if can hold, I will have more confidence to hold for this one, or to buy this one. For MedTech, at least some rebound. This is bottom catch. I need to remind you, bottom catch can be aggressive, can be risky. It's not for everyone. You should check whether or not it's your piece of cake. It's your type. You are the aggressive type or not. If you are not, maybe you don't want to. You want to forget about the desperate buyback. Maybe you want the crazy bull on the go. That may be more suitable for you. Okay. So someone mentioned about 00700. Tencent in the daily charts, we have the Taichi, but the price hasn't yet break up the high of the blue Taichi signal. Not that safe. Of course, the other conditions are satisfied. Retailer more than 90, extremely forceful drop when the inner lower channel line crossed down the outer lower channel line. Only that the close price hasn't yet break up the high of the blue Taichi signal. But just now we have checked the weekly chart, remember? Weekly charts, the price already get support at the previous yellow Taichi signal. We go to the weekly chart again for you to check. Weekly chart, the previous year, the previous yellow Taichi, it's not here. I remember we got a yellow Taichi signal. Oh yes, the previous one is here. See? The previous yellow Taichi signal in the weekly charts. So support in the weekly chart. So this week, this is okay. So this is this week, right? This week the price begin to rebound, begin to stop dropping further at the support level. Daily charts, you want to find a entry point daily chart. You want to be safer. Yes, the price should break up the high of the the blue Taichi signal in the daily chart. Today it touched, but you see we got some sort of resistance. We got a long upper shadow. It's not a very long one, but it's an upper shadow. We have some resistance. We need the price break up. Okay, so if the price successfully stand above the yellow Taichi signal here, blue Taichi signal. Okay, the blue Taichi signal. If the price finally break up the blue Taichi signal here, the high of the blue Taichi signal, at least the price will continue going up to cover the gap. To cover the gap, maybe touch the high, the open or the high price of this bearish candle before the gap. Then this level, there would be some sort of resistance. There would be some sort of resistance here. Change the volume. Okay, resistance is not that strong. Not that strong. Okay, not that strong. Actually, the strongest resistance already been taken. This is the longest, the biggest volume bar. So this today the price already break up. That is a good sign. That is a bullish sign here. Okay, yeah. So maybe the price might continue going up, and then the outer upper channel line would be the resistance in future. Maybe this will be the target around this level. So that is for Tencent, for bottom catch. This is the aggressive method. I need to remind you again. So US stock, 富途. I know many people like 富途, right? 富途 also, where is 富途? 富途, yes, 富途holding. Desperate buyback, retailer not more than 90, and very extremely forceful drop when the inner lower channel line crossed on the outer lower channel line. Blue Taichi signal, price about to break up, the blue Taichi. Yesterday touched, last night touched. You can monitor. This is the one you can monitor. Okay. So this one maybe in the future would give you some, at least some rebounds based on the pattern here. Also, we say it can fail. Any method can fail. Okay. If it fail, we should stop loss. That's all. Okay. So if you make a comparison between Futu and Tiger, right? They belong to the same sector. Can make a comparison. Then you realize that Futu, the pattern is more beautiful than Tiger because Tiger, no Taichi signal, no Taichi. Although we have an extremely forceful drop, we have retailer more than 90%, no Taichi. Futu is more beautiful, right? We make a comparison here. Futu got all the conditions satisfied because okay, so and also for Singapore we got Java recently, very sharp drop, and then it's not an extremely forceful drop. At least now the price drop below the inner lower channel line, only for 1 day or 2 days. Not that sharp, but retailer more than 90%. Okay, 2 blue Taichi already. 2 blue Taichi. Today also is a Taichi. Blue Taichi, the same level, close price around the same level of the previous blue Taichi. So once the price, close price in near future can break up the high of the blue Taichi, maybe that is a bottom catch chance. Okay, but we should set a stop loss. Okay. Once it fails. This is for Java. Okay, so you can try to find some patterns yourself, either for desperate buyback or for the crazy bull on the go, because you need to practice yourself to well master the 2 methods. Okay, so what I can do is we share with you how to do it, but the practice on your own part. Okay, so you got other questions? Not about stock diagnosis. I want some questions regarding maybe the knowledge points, which part you are not so sure about, still confused. Any other questions? Stocks already shared with you the method how to analyze, showed you a lot of individual stocks just now for both patterns, right? I think you should learn to make a decision on yourself independently. If seems like no question, okay. So if no question, filter. Access channel for filter. Oh, that is a good question. I didn't try. Also, I'm not sure whether or not we have the filter based on the access channel. Not sure. I need to check. Oh yeah, we do have access by points. We do have. But I think that this is not. I think if you want to do the filter, you can just try the Taichi signal. Try this. This is blue Taichi, all right? This is blue Taichi. Don't try to filter based on access channel. You try to filter based on blue Taichi. Then use the access channel to conform, and also multi-color dragon retailers to conform. That is a better method. Okay, so don't try this access buy point. Access buy point is based on some other conditions. For example, I remove the Taichi signal, then I choose the XS buy points. It seldom appear. XS buy points only appear very rarely. You see, it just appeared for this ones for a very long time. It only appeared for this ones. So access buy point is based on some other conditions. It's still based on access channel, but some other conditions. Okay, so if you want to filter the desperate buyback, you just choose the Taichi signal. Okay, don't try this access buy. You try the Taichi. Try Taichi signal, filter based on Taichi, then apply the access channel and multicolor dragon to double conform. Okay, so that's about the filtering. So other questions? If no other questions, it's already 9. So we'll just finish the session today. Agree? Okay, so then let's just call it a day for today. Hope you have learned about the method today. One method for aggressive type, bottom catch. The other method for, let's say, a safer buy for short-term trading. Safer buy for short-term trading, crazy bull on the go. Okay, so yes, also thanks for your time and thanks for coming back all the time, every time, attend the session, and hope we can learn and improve together. Okay, that's all for today. Okay, so bye-bye. See you next Tuesday. Bye-bye.